Good afternoon. This is Chris Robinson, Robbins Ag Marketing, with the noon update in the grains and livestock. Well, no two ways about it. It's a sea of red today. Um, Going to start with corn, new crop corn, traded down to 409 and a quarter. The contract low is 407 and a half. We'll see if that can hold or not. I think what's weighing on this market is just overall the crop conditions came out much better than a lot of people had expected. It's putting a lot of pressure on it. And people, be careful about blaming the funds too much. They don't have a massive short position. They were short about, I don't know, 15,000 soybeans. They were short maybe 170, 180,000 contracts of corn. That's not a lot. If these guys, they have plenty of dry powder left to put to work. They've been just as frustrated as the farmer. We've been in a grinding lower market. Um, Historically, we usually get one weather issue. We didn't get it this year. We haven't gotten it yet. And I think they were kind of hedging their bets as well before they really got massively short. I think you've seen the financial community stay away from the grains by and large. They've been very active being long in the live cattle market, but I think it's kind of a blessing that they don't have a bigger position in the grains at this point. Well, will that change? I don't know. We'll see. We're going to probably get some headlines today because we've got uh, soybeans, the spot month in soybeans now. That's the lowest price we've had going back to December. August beans at 976 and three quarters. You got new crop beans flirting with 1004. 1004 is a very big level for a lot of reasons. It's close to $10, the big psychological level. But also, if you take the entire uh, price spread that we've had for this contract, um, 1004 is a big retracement. It's a 62% retracement. So you got the computers looking at this area. I'm not saying it's not all over yet for the soybeans because there could still be an issue in August. But boy, we better start hearing about something soon if we're looking for a rally. Moving over to the wheat, obviously new lows there. Uh, Chicago wheat down 9 cents, trading 529 and a quarter. KC wheat down 7 cents, went down to the contract low at 515. We're trading at 519 right now, so we're back to those May lows. And we'll see. Can we make a stand here, or are they going to lean on it more? Chicago got to within a nickel of its contract low from back in May. It was 521 and a half. We traded as low as 526. Again, we're 529 last. And Minneapolis wheat, once we took out that 585 level, it's opened up the door. We traded down to 577. My feeling is if we take out 575, then they'll start adding to those positions. The Buns just got short last week, about 10,000 contracts on Minneapolis wheat. Doesn't sound like a lot, but it's a big position in Minneapolis. So there you have it. We haven't had a lot to work with this year. Disappointing action here right now. There's still revenue to defend. Um, I would definitely want to look at protecting at least 410 December corn right here. And I also want to at least defend $10 beans. We've had some shots earlier in the year to do stuff with beans. We haven't had a lot of shots to do anything with corn. Corn's been a grinding lower market. We had the one little blip up in April, right after tax day. It looked like we were going to possibly have a weather issue. And little did we know that that was sort of the last train out. So I wish I had better news to talk about the grains. I think it's a situation where if you can hold on, fine. I don't want you selling cash grain down here unless you absolutely positively have to. If you can stop the bleeding with a put, I think that's the way to go. There's one more Horizon event coming over on August 12th. We're going to get a USDA report. It may be one of those reports where we're so bearish in front of it, even if we got a bearish number, we could turn around. But we'll see. There's another 2 weeks to go before that number, but no two ways about it. Depressing day here in the grain market. Switching over to cattle, August fat cattle up a buck, trading at 228.90. If we can take out 229, 230, and settle above it, that will be friendly for that contract. That is a new all-time high for cattle. The previous high had been back in June 12th when we traded 229.125. We just hit this morning 229.375. So it took it out by a tick. We are a little bit lower right now, but that's kind of the flip side of the grain market. The cattle market has been on fire. It's been a great bull market. August feeders, 335 and change, up a buck 70, traded as high as 335.97. I think if we take out 336, There's no, you're going to have people start talking about 350 feeder cattle. I know that sounds crazy, but just back in around Thanksgiving, we were concerned that we were ever going to see $3 cattle. So cattle market continues to go higher and higher. The herd's too small, and the American consumer continues to pay for expensive beef at the grocery store. Moving over to the hogs, there's a little bit of profit taking or hedging or spreading going on there as well. Hogs that had a good rally, a good recovery, are under a little bit of pressure. Um, if you look at October, which is I'm looking at right now, 88.50, we're down on the day. I think it's still a good idea to try and look at defending 86 cents on paper. Make sure that that's the worst it ever gets. You got to remember, back in April when we hit the skids with the stock market correction, this October lean hog contract traded down to 74.60. So 74.60 even today at 88, 89 cents. That's still a lot better than being down there. Like I always say, stop trying to call the tops and the lows. Keep yourself hedged until you sell your product or sell your animal. Mr. Market's got a lot more ahead of us. Who knows how it's going to turn. The people that are extremely bullish cattle right now, extremely bearish grains, 2 months from now, they may be whistling a different tune. We just have to see if the headlines can change and we can turn this market around. If you're looking for help with your marketing, with your how to manage risk, how to sit tight with less stress in your marketing, it's exactly what I try to do. I try and take the things that I learned on the floor as a floor trader for a couple decades and try and help my clients who are in the ag industry to manage their risk. You can call me anytime, 312-638-8868. Look forward to hearing from you. This is Chris Robinson. We'll be back at the end of the day to see how we finish a whole market podcast. Take care.